So welcome to Learn by Choice. So in this episode, we are going to talk about some of the key concepts under UPS, Unified Pension Scheme. What is final withdrawal? What is family payout? And what is the dearness allowance payable under UPS? Please subscribe to Learn by Choice. Your subscription will motivate us to make more and more videos. In UPS, the final withdrawal is allowed and it is permitted for the UPS subscriber at the time of retirement or superannuation. So this final withdrawal can be availed either by the subscriber or by the legally wedded spouse. So the options under UPS for final withdrawal is allowed up to 60% of the pension corpus in the plan account. So withdrawal is allowed at the time of superannuation, voluntary retirement or retirement under rules, fundamental rules of government 56J. It should not be penalty. Then the pension corpus is a total amount saved in the PRAN. PRAN means permanent retirement account number, which is linked to the UPS. So how this 60% is calculated? It is based on the two individual phenomena. One is the individual corpus or the benchmark corpus. Whichever is lower, that will be considered for allowing 60% withdrawal. Individual corpus is the balance available in the PRAN account of the UPS subscriber. Then the benchmark corpus is the predefined standard corpus set by the government of India or PFRDA. For each subscriber, there will be benchmark corpus based on the contributions collected and his regularity of the contributions. For example, the individual corpus, we call it IC. If it is higher than the benchmark corpus is BC, the withdrawal, the 60% withdrawal is calculated based on the benchmark corpus. Anyway, that individual corpus, if it is higher than the benchmark corpus, this is the difference amount is credited to the subscribers. So, while withdrawing the 60% amount, you have to keep in mind that it will impact your assured payout. For example, even though the system allows 60% of the corpus to be taken as withdrawal, final withdrawal, but it will impact your assured payout to the extent of 60%. For example, if your assured monthly pension payout is 10,000 rupees, if you are taking out 60%, then straight away you are losing 6,000 rupees of your pension. So it is advisable that you don't go for this final withdrawal, even though system allows for 60% withdrawal. So when can you withdraw? As we already discussed, it is allowed at the time of superannuation or retirement, or voluntary retirement, and retirement under fundamental rules 56J, a specific rule for government employees. So what's the family payout under UPS? This is allowed for the legally wedded spouse of the UPS subscribers. So the UPS subscriber dies while receiving the pension. So then the legally wedded spouse will be eligible for the family payout. So the spouse will be eligible for 60% of the pension amount drawn by the UPS subscriber at the time of his death. So if the pension of the UPS subscriber is 10,000 rupees, then the family members, the spouse, the legally wedded spouse, will get 6,000 rupees as a pension along with the DA. So this payout for the spouse is allowed for a lifetime. So for the deceased NPS employees who have retired before 31st March 2025, for this kind of subscribers who are already drawing NPS, then those who have retired before 31st March 2025, for them the family payout will be the difference between 60% of the admissible payout of the subscriber at the time of his retirement and 60% of the representative annuity amount. So this data also will be published by PFRDA. So the difference between these two will be paid as a family payout. So the spouse receives the following as additional benefits. The lump sum payment, they are eligible for lump sum payment. Lump sum payment is different from the withdrawal allowed at the time of retirement. Lump sum payment is 10% of the salary, last drawn salary, is payable for each 6 months of the service completed by the employee. So that is allowed to the spouse. Then the monthly top-up amount, the difference amount between 60% of the assured payout and also 60% of the standard annuity. So that also will be payable, and dearness allowance is also payable. Then the interest component. at the rate of simple interest based on the PPF rate will also be payable until the claim is submitted by the legally wedded spouse. If the legally wedded spouse is delaying the submission of the claim form beyond the deadline defined by government, then there won't be any interest paid on that. So the dearness allowance is payable to the pensioners to help to cope with the inflation. Then this dearness rate is decided by the central government from time to time. So the DR or dearness allowance is payable for both admissible payout and also the family payout, spouse pension. It's only paid after the pension payout begins. So that is very important. Then the purpose of dearness allowance is to keep the value of the pension so that it doesn't erode over time due to rising prices. So this dearness allowance is revised based on the DR rate as applicable from time to time. So to summarize what I told, so UPS subscriber is eligible for final withdrawal and the spouse in case of death is eligible for family payout and dearness allowance is also payable under both the scenarios. Thank you for watching Learn by Choice. Please subscribe to Learn by Choice for more and more videos.